Hi, everyone. My name is Chris Kimble, founder of Kimble Charting Solutions. Today's April the 15th, and welcome to another edition of Your Daily Five. Today, I want to talk about some black swans, and oftentimes when people think of a black swan, they think of a bad event. And I just want to kind of bring up a black swan as far as unusual circumstances. And so I want to talk about where margin debt in the S&P and the rate of change happens to be from the StockCharts chart. Talk about a rare event as far as the worst quarter in 40 years, a black swan for bonds that we just finished up. I want to talk about a black swan as far as yields and TLT being above and below 200-day moving averages to a degree that they haven't been, in history, and talk about finish it up with a few bullish ascending triangle patterns. But this was a black swan chart to me as far as the it's a combination chart. The gray is the S&P 500. We're looking at a weekly chart over about almost the last quarter of century. The red is margin debt, and you can see they're both extremely high. And then the bottom applied a 45-week rate of change. And so when you look at the Y2K top, you can see the margin debt and the S&P were both extremely high, and the rate of change had been very positive, up almost 70% over the prior 45 weeks. Then we roll into the 2007 top. You see the margin debt is excessive again. Here's the S&P, and again, the rate of change essentially comes in at about that same 70% number. So it's taken a lot of years, and so here we are almost a decade and a half later to where we've seen an extreme rate of change over, since the COVID panic low of last March, and we see margin debt extremely, high again. So this is a rare combination. It's not a timing tool by any stretch, but as I said, the black swan is a rare bird, and this is a rare circumstance that's taking place. Speaking of rare birds and circumstances, this is from the Elliott Wave International, but it caught my attention because Sir John Templeton brought this up to me in the late 1990s when he said, Chris, here's 8 reasons why I think stocks could be flat for at least 15 years. This was one of those 8 reasons, but as Elliott Wave points out, this is the household, how much is owned by the household, their equity allocation. It's household assets as a percentage of total financial assets. But you can see where it was almost up to 30% in 1968. And then the Dow went flat for 15 years. Then you can see it reached about 32% in 2000. And then it was flat for still over a decade later. And then now here we're sitting at very high levels. So again, this is a black swan as far as it's just an uncommon, circumstance, not a timing tool, but it's something I think we ought to be aware of. Another black swan event really took place a year ago, but this is the ratio of retail money market assets. And so back in the first part, just a little bit over 3 years ago, time's flying, in January 2018, cash levels were very low. And when they were, in other words, I kind of look at this as fuel in the tank. There wasn't a lot of fuel to push the market higher. And so it struggled and it was flat for almost 2 years. But then the market sold off into Christmas, if you'll remember, of 2018, had a really sharp drop in the last quarter. And then people started to panic and they raised fuel levels. That gas tank to purchase things got pretty high. Then we had low cash levels in January of 20, about a year ago. We saw the market drop sharply. And then as everybody was buying water, toilet paper, remember all the panic that was going on, they were also buying cash. And so you see this rocketing higher into the cash levels were the highest in many years. This chart goes back to 2016. But that was the fuel, everyone, for this historic rally that we've seen. So now when you think of a black swan situation, we're now at one of the lowest levels in the last 5 to 10 years as far as the availability of cash to fuel this market. And this doesn't have anything to do with the Fed and what they're doing in the stimulus packages, but this is retail money market levels are pretty low right now. So another black swan, event. Speaking of black swans, this was a bad black swan if you were heavy into bonds. This looks at clear into the 1970s, and so you'll notice that the quarterly performance, Treasuries, as this says in the upper left from Bloomberg, it was a dark winter. Treasuries post the worst quarter in 4 decades. You can see not too many times. You do have to go back clear into the 1970s to see a quarterly performance for bonds, being this poor. And so that was a Black Swan event that if you were long bonds. But what I wanted to look at is one of the cool features of StockCharts is that you can look at what kind of a degree is an asset above or below a moving average. So let's look back a year ago. So this is a TNX, which is the yield on a 10-year bond. And let's look down here at the number 1. This was how far below TNX was of its 200-day moving average. And you can see this chart goes clear back into the 80s. So we've got a long-term perspective. It was almost 70% below its 200-day moving average. And so that was a time to long yields, or actually, if you could, to harvest bonds. But now, 1 year later, essentially, what are we seeing is that TNX is now nearly 40%. It was 60% above its 200-day moving average. And so a lot of times, 200-day moving averages can be viewed as support and resistance levels, but I like to look at the 200-day moving average as far as being above or below as a Black Swan event of opportunity. And so you see that this is an extreme going on. And the same type of extreme is taking place in TLT. You can see right down here in the lower left, TLT is roughly almost 8% below its 200-day moving average. And I highlighted in these green vertical bars with the number 1, other times when TLT had experienced or was roughly 8% or a little bit more below its 200-day moving average. And you can see several times over the last almost 15 years was a good buying opportunity for TLT. And so that's why I kind of wanted to point out that these extremes can become extreme, opportunities. So we see an extreme in performance as far as ugliness for TLT, but I think this could end up being an opportunity. So to me, a heck of a support test is taking place at 2 with TLT at extremes. So as I want to finish up today, nothing new as far as the pattern itself, but the bullish ascending triangle pattern is most likely one of the most favorite patterns of most technicians, and it's just characterized everyone. I kind of tried to highlight it here in green as far as a flat top and rising bottoms in an upward trending market. And so when we look at Tesla, that we see that it has had sold off quite a bit. But when you look at it, this is a daily chart on Tesla, that when you look back on the last couple of months, you see that it back here, it pushed below last year a little bit in 2020, but it's 200-day moving average. But it came very close to it in February, a couple of months ago. But it's created a series, 2 higher lows, and then it's attempting a breakout here. So this is a nice bullish pattern. When you would, excuse me, I need to go back. Got a little trigger happy there. The measured move would suggest, if you take the low of roughly around 500 to 700, $200, a breakout of this bullish ascending triangle would suggest that Tesla could be heading towards a 900 level, which would be a test of its prior highs. So looking, here at XLV, the healthcare, we see the same similar pattern. We have rising bottoms for many months. We have these flat tops. And so the measured move here would suggest a breakout above this 118 level that you could add another 10% quickly to XLV. And then a similar thing with Medtronics, it's breaking out, and its measured move would suggest on this breakout that Medtronics reaches around the $140 level. So as we looked at, there's Black Swans going on in margin debt, where bonds have a Black Swan. Their 200-day moving average is really extreme. So to me, there's a lot of opportunities in these extremes going on. So as we wrap things up, thank you for joining us again. And we do have a 40% discount going on to StockChart members if you go to kimblechartingsolutions.com/StockCharts. Thank you, everyone. Have a great, great month.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.